mentally fighting with yourself about money? No need, we'll do it for you. I'm your host Arka, and welcome to our segment Rich or Regret, where we find out if your next financial decision will make you rich or make you regret it. And in this episode, we'll be exploring an important question for Malaysians. Is it better to prioritize saving in traditional bank accounts, like, savings accounts, or should we focus more on investment like stocks, real estate, or mutual funds? Both savings and investing have their merits, of course, but which strategy offers better financial security and growth potential in the long run? To find out which is the better option, we have two debaters here to help us break it all down and explore what's best for Malaysians' financial future. First up, one who is all about investing. One, you believe Malaysians should be choosing and focusing on investments like stocks, real estate, mutual funds, and can you share why you think this way?
All right. Hi there, guys. I'm One, and I would, of course, advocate for all Malaysians, especially now, to consider having investments aside from having savings. Because investments in stocks, like you mentioned, real estate, mutual funds, and all that, they definitely offer significantly higher returns compared to that of having a savings account. So that will allow all Malaysians to grow their wealth more effectively over time instead of having just limited to a savings account.
Thank you, Juan. So he's in the opinion that investments is the superior option. But on my other side, we have Pavitra, who is on the side of savings. So can you tell us why you think prioritizing savings in traditional bank accounts is the much smarter strategy for Malaysians?
Okay, thank you, Arka. Hi, everyone. I'm Pavitra. Definitely higher investment returns with higher risk as well. But I think Malaysians should stick to saving, the traditional saving with traditional bank accounts, because savings provide a safety net for emergencies, unexpected expenses, or even during economic downturns. And this money is actually considered as liquid and it's easily accessible when you need it. And moreover, we are actually insured by institutions, something called PIDM. So ensuring that your money is protected even if the bank faces any financial situation.
I see. Well, thank you for that, Pavi. And with that, let the debate begin, and may the best debate win. Now, my first question will be, which strategy provides greater long-term financial security for Malaysians? Saving in traditional bank accounts or investing in assets like stocks, real estate, or mutual funds? Let's start off with one.
Okay, guys, it's pretty straightforward. When it comes to investing, especially in stocks, real estate, also mutual funds, right now, where we at, Malaysians will have a far greater opportunity for a long-term financial growth and also security. We're thinking long-term here, all right? Because, yeah, sure, savings accounts, they offer stability, but one thing we must take into account is that the returns for just savings accounts are very low compared to that of, investments. Because right now, it's often we see that even if you start saving in your savings account, you can't keep up with inflation. And inflation is the one thing that gets us down. We save as much as we can, but it's not enough. It's not going to be enough at the end of the day, You want to get more higher returns, you have to start investing, okay? Because not only will it protect you from inflation, but it will grow over time, okay? And that is crucial for Malaysians to build substantial wealth for the future. Other than that, it's like investments also allow you to benefit from compounding returns. So over time, like I said, these returns can significantly, definitely will outpace that of savings, accounts. And the rewards, of course, it's enough said, it outweighs that of just the normal savings account lah. And yeah, investments also give you a sense of diversification, whereby you can diversify. You do not have to put all your eggs in one basket, all right? And you rely on just the stability of that just one bank account. You can diversify, you can put your investments in different markets, you can put in stocks, you can put in housing property, you can put it in anything you want, whatever you choose, and it will grow depending on what it also reduces the risk of losing everything in one go, and also increases the chances of sustained growth. And yeah, that's why investing much better in the long term for long-term sustainability and growth of wealth, in my opinion.
Oh, well, it's quite interesting. You mentioned losing everything in one go. Is that possible in a savings account, Bobby?
No, no. Actually, now we have so many investment options in Malaysia, and we even come across every day like how people get scammed and all that stuff. But obviously, there are ways to invest. Okay, but when it comes to traditional banks like this, they offer us stability. Obviously, the return is very little, but there's stability and peace of mind that our funds are secured properly by the PIDM. Now, a part of that, this security is actually very invaluable in a country if there is any economic uncertainty can strike, like the global pandemic. Okay, when it comes to situations like this, we don't have to worry about the market fickleness or how are we going to make the most out of it.
So you're saying you feel like savings is consistent?
It's consistent, yes, it's going to be very little, but it's there. Okay, and we are insured. So obviously this provides a long-term financial security.
So you feel it's the more reliable
Yes,
option.
more reliable, correct.
All right, interesting. But with that...
It's like a safe option.
So someone wants to go more risque versus...
Risk
Risk
taker.
taker versus safety. But can Malaysians effectively grow wealth through savings alone? Or is investing necessary to keep up with inflation and rising living costs one?
Yes, because while savings are valuable in terms of short-term financial security, investing is necessary for Malaysians who want to grow their wealth effectively and, of course, like I said earlier, keep up with inflation and the rising cost of living. Because every single year we see everywhere we go, everything, all the prices are going up. But our savings are just remaining stagnant. You know, they're not growing in tandem with that of the rising cost of living, the rising cost of everything around us. So in today's economic environment, especially today, traditional savings account, they often provide returns that are lower than that of the inflation rate, which doesn't help us in the long run. So it means while your savings may grow, but the purchasing power of those savings declines over time. All right? I can give you so many examples. You save 5,000 ringgit today in a normal savings account. By next year, maybe you'll have maybe 6,000, 7,000. But when you invest some in stocks or anything like that, that can grow at least 2-3 folds.
But is the returns guaranteed?
The returns, if you are clever enough, or if you can monitor your investment good enough, some investments allow guaranteed success rate.
But there is a if.
There are, of course, there are going to be stocks that you won't
Stock
have.
crashes, market crashes.
There's going to be stock market crashes, yes, that's true. But then there are also other stocks that remain resilient over time.
Yeah.
Gold, for example, you put your money in gold over time, that money will grow and grow and grow. You know, there is a very, very no likelihood of gold ever crashing. You know, compared to that, if you put your money in like currency, for example, for foreign exchange, yes, there's going to be times where we've seen the ringgit go all the way up, you know, in the past few months, and then now it's stabilizing, going back down. So that's a bit, you know, a seesaw, you know, where you go up and down, but the smart money will go towards investing in something that you know will have better returns in the future and stability. So you can choose, like I said, diversification. You are not forced to put all your money in one basket, and you're not forced to put all your money into something that, oh no, you know that it's not going to work. But at the end of the day, you can find something, an investment, a truly good investment whereby you can just stick with it and you know over time it will grow. Property, for example. You invest in property, that will never go down. Property market will always go up in at least 90% of all cases. So that is another way of investing, securing yourself long-term sustainability for the future. All right?
Bobby, any rebuttals for that? You seem to be already cutting him through there.
Okay, so for me, I think investment is a secondary option these days. Nothing comes like having a proper saving account. You can have it today and you can lose everything tomorrow. That's how I see investments, like, because many years back, everyone was investing in this broker called FX broker. I was one of it. Everyone was doing good, and then boom, something happened. Everyone lost their money, including myself and my family and all that. So like what one said, yes, there are like good options available. But what I'm trying to emphasize here is the
Trustworthy.
the trustworthy, the security. And just now you asked us if we can have enough saving by how to say, by savings alone. Yes, but one with definitely with discipline and clear financial plan. And also, for example, like fixed deposit, it usually offers like a higher interest rates that actually allows us to grow our wealth steadily. And then by contributing to fixed deposits or even our saving accounts with 5% or 6% interest, definitely we can have savings.
Oh, so you're saying there's more than one way to save in a bank, because
Yes.
one was saying it's just one way.
No, it can be our saving accounts, and there is also something called FD. Yeah, and what gives me the satisfaction here is it's going to be a small return, but then I'm secured and it's accessible anytime, unlike investment.
Again, risk versus stability.
Yes.
But does saving money in a bank offer more financial stability during economic downturns, or do the investments have the potential to outperform in the long run despite the risks? Bobby.
Okay, so now during economic downturn, the main thing that we should have is the financial stability. Like I said, savings are liquid, so it is accessible to us during any unexpected expenses or emergency. Unlike investment, it is profitable but also subject to market fluctuations. Okay, we don't have to face that when we have our saving account. And once again, like I told you, we are insured by PIDM. So this means even if the economy takes a downturn, our money is still secured. And also, investments can lose a significant value if there is any market fickleness, and stock markets often drop during economic downturns, okay? And real estate can even take years to recover from crashes like this. One of a good example is during our pandemic. You get what I mean? Yeah. So, and also there is no need to worry about monitoring performance or even reacting to these market trends.
Bobby keeps referencing the pandemic and how everything went down, investments all failed, it's L's everywhere. Can you give us an example where investing actually shown in moments of, market crashes and pandemics and such?
I'll do you one better. Sometimes you got to think long term,
Okay.
future, all right? You don't just put your money investments to take it out the next year or the following year. You put your money in for an investment to maintain in a long run, okay? So yes, okay, I admit that savings account, they offer stability in the short term. But then when it comes to investments, the potential can significantly outperform that in the long run, okay? Especially during economic downturns. We have let's take the aircraft or the airline industry during the pandemic. Of course, everything went down. Everything was horrible, all right? If you invested in AirAsia or Mars or, in any aviation group during that time, if you had stocks there, of course, things would not go well. That means don't take your stocks out now. Of course, there's not going to be any return. But now, right after the pandemic, we are now recovering. Are we not?
Tourism boom.
Tourism boom. And now that stock is flying. Mind the pun. But it's literally flying. So, in the long run, what would you have? Something that you've already invested in the long run, and now the potential return is even higher than that of before you invested in
So
it.
it is not for everyone.
I'm not saying it is for everyone, but the thing is, you have to be the kind of person who has the long-term mindset. If it's a short term, you want to save up for next year's holiday or for the following 2 years trip to go overseas or something, yeah, sure, put it in your savings account, put it in your fixed deposits. But we're talking about saving for the future. Investments whereby you you stay invested, especially during the downturns, and you can take advantage of that, income or the natural recovery cycles from these markets and have a substantially higher return once the economy recovers. Because you don't see that in savings account. You don't see that whereby, even after the economy recovers, it's still the same amount than that. Okay, so yeah, stability, fantastic, but there's still no earnings. Like, you don't get higher earnings from that. For example, I'll give you another example. During the pandemic, of course, one of the biggest market advances was rubber gloves. Oh, yes. People were, whoever invested in rubber gloves or medical supplies before the pandemic, their returns shot up like crazy during the pandemic.
Gloves, masks,
everything like that. Anyone who invested in medical supplies during that time, they came out of the pandemic with a lot of spare change to spare. So it also depends on your opportunity. You have to have also an opportunist mindset. All right, you need to be able to tell during what cycle of economy should you invest and should you take out your returns, which is the most important thing, all right? Because, yeah, it's not for everyone, like you said. But for Malaysians, it is the better option, worthwhile option. Who wouldn't want to invest knowing that they'll get potentially better returns than that of just saving in your savings account?
A very glass half full answer from one, but can everyone afford to be an opportunist in Malaysia, especially those with lower income? So which approach is more practical? Focusing on building a savings buffer or venturing into low-risk investments? Let's start off with Pavi.
Okay, so the most practical approach for lower income is definitely focusing on building saving. I think that is the most practical, and also the priority of establishing a safety net first, okay, because a foundation first, okay, the basic. And like I said, these accounts, they offer liquidity and immediate access to our funds. So anyone with lower income can tackle the urgent financial needs, not to having to worry about selling investments at a loss or waiting for market to recover. This is just for lower income category. I think they should prioritize saving account first and then maybe think about investment, because investment money usually is something that you're okay to lose.
But you're saying people with lower income don't have that money available, so they should stick to savings.
Yes, for the beginning, yes, they should stick to saving. And if you think that you have enough money and you want to multiply it, then you can consider investment.
But everyone's first choice should be savings.
Savings, yes.
I see one.
I disagree.
Oh.
I disagree. Completely disagree. Because if you want to remove yourself from that low income bracket, you need to start thinking outside the box, and you need to grow your capital, your worth, by investments. All right?
I understand, but investment usually gives higher returns, but it is risky. If you only have this amount of money and you want to put it all to multiply, thinking that it's like a gambling world, that, by luck I can get more, what if they lose it?
That's where
you don't
have
face
to play
that
smart.
in saving account.
It's not only no. Okay, you always think about stock investments. Oh, you got to go big money. No. There is also options for lower risk investments for that of those who are not capable.
Really?
All right. Yes.
I always thought with investments, like, you have to go big to get big returns.
No, there are options where you can start small and grow over time, even now as we speak. Because those who want to venture into this investment scene or portfolio, they can go into low risk investments, and it can be practical in the long run, okay? Because for lower income Malaysians to grow their wealth over time, there are low risk investments such as government bonds. We've got diversified mutual funds. It offers higher returns, but also minimizes the risk compared to that of traditional stock market. So there are options.
You're saying they can tailor it to everyone's needs?
Yes, there are options for those who are in the high income bracket, the middle income bracket, and also the lower income bracket. So these low risk investments, additionally, they are accessible to all individuals. And also, we have these robo-advisors nowadays, online investment platforms. We have the tools necessary to make these investments. Just recently, Touch and Go We have Touch and Go in our phones. Every single one of us is familiar with Touch and Go. They just launched an investment platform. Now you can just upload or credit yourself a few extra ringgit in your Touch and Go, and you can start investing with Touch and Go. And that's how simple as it is. You don't need to go thousands ringgit, 10,000s of ringgit just to do or start an investment portfolio. It can be as small as 10 ringgit. Maybe you'll earn like 1 ringgit to 2 ringgit in a month, but then once you get used to it, then you increase your portfolio from 10 ringgit to maybe 100 ringgit investment during that month, and maybe you'll get higher returns. And that's how it starts. We start off slow, small amounts. Then as soon as we get the hang of it, we get the knowledge, we get the investment returns, then we increase our portfolio steadily. Stability, of course, we don't go all in, all out just like that. No, that is, like Pavitra says, gambling. We don't want to gamble. We want to make smart decisions, smart choices. So we go slow. We start off slow, we start off small, and then once it increases, once our portfolio can increase, then we can put in a little bit more over time. It's like saving as well. You put in a little over time and it grows. Similar with investments. You start small, but then you get higher returns because the percentages are always higher than that of savings.
I think mine is a safer return.
But would you argue that investments requires more effort than saving?
Definitely. That's why I say we don't need all this monitoring on the market or even paying for the brokerage or the brokers. Nothing. It's our money, and then we get to put it in the saving account. And although it's a smaller returns, it's still a safer and happier returns.
So we have Pavi here who likes to leave her money there for 10 years and not have to worry about it, versus one who wants to meticulously monitor and make sure he gets the massive gain. So it seems both debaters here have a fair point, but it's really up to you to decide who actually won. So let's have a short recap. We have one who believes that investing is better at snowballing your wealth, and he feels that investing in stocks, real estate, or mutual funds offers Malaysians much better chances for long-term financial growth and security. And he feels investing is essential for Malaysians looking to effectively grow their wealth and keep up with inflation. And like you said, it doesn't have to be big numbers. You can start off with 10 ringgit. I can't testify, but that's what one is claiming here. And investments can create additional income sources beyond just your salary and savings. And learning about different investments does help individuals understand personal finance and improve their wealth management skills. So there is some work you need to put into this. Whereas Pavi here, she thinks that having savings is still the better option, and it should be your first option due to its low-risk nature, and you also feel that traditional bank savings provide unmatched stability and reassurance, especially for safety-focused Malaysians, what with all the scams happening now,
Yes.
correct? And Malaysians can build wealth effectively through disciplined saving and a solid financial plan. Also, the matter of having reliable savings fund is essential during economic downturns like the pandemic or recessions, or even something smaller like losing your job, right? Savings accounts provide liquidity, allowing quick access to funds for emergencies like medical bills or job loss. And it seems that both sides have presented really strong arguments. I'm just sitting like, do I want to make money, quick, or do I want something stable? Like, I'm stuck here. But it's really up to you, the audience, to decide who won this debate. Was it one here or was it Pavi? Drop a comment below and let us know who you think made a better case. Be sure to follow us at cleverstock.my on our social media channels, and don't forget to visit www.cleverstock.live to catch our live sessions from Monday to Friday, where we cover everything finance. Bye-bye.
Scan now and download Cleverstock, your trusted source for market insights.